Alright, so what's good, everybody? I figured I'd do another video, with the whiteboard. So I know that my options trading course is a little bit all over the place, and please forgive me for that. Anybody that knows me knows that my brain is like always, it's always running like 1,000 miles a minute. But I was thinking today we was gonna talk about, if you have everything set up and you're trying to, follow somebody that calls plays. Calling plays meaning like you're gonna mirror the options that somebody actually shares with people. So there's different ways that you could do that. There's Discord groups that people call plays. There's quite a few people I know that do that on Twitter, aka X. And I'm going to show you today exactly what that means. If you see somebody that you're following for plays, and I'm going to break down the dynamics of a play call. So, have you ever seen somebody and they'll make a post or something like that, and it'll say something like this. I know. Sorry about the handwriting. I'm trying to write bigger. My handwriting is really not that bad, okay? Like just listen to what I'm saying, okay? And again, this is just an example. Just an example, okay? All right. You understand? Cool. BTO. Then you got V. Call. 100. And then 0.59. Again, this is just an example, okay? BTO. Buy to open. Then the next one is going to be, that's going to be the stop. So V is going to be, in this example, is going to be Verizon. A quick station break. So I'm sitting here editing this video, and I just realized I had the wrong stock for the V as the ticker symbol. V is actually for Visa. Verizon is actually VZ. So don't crucify me for that. I realized that, and I'm actually in the process of editing right now. So V is actually for Visa stock. Sorry, I'm human. Mistakes were made. And also my damn wife beater was sitting here doing like this. Don't judge me. I know you're gonna judge me, but it is what it is. My bad. I apologize. I'm just trying to get the information out. But yeah, back to regularly scheduled programming. Call. Remember, we talked about calls or puts. So a call, meaning what? What is a call? Going up, right? You want looking for stock to go up. So it's a call. Then next you got the strike price, which is going to be 100. 100 is going to be the strike price. So when you go into the options chain, you on the left side is going to show you the strike prices. So that's what call you're going to go for. Under calls and not puts. So the 100 is the strike price. And then 0.59 is going to be the cost of the price when they made the call. Now, don't be fooled, because a lot of people when you actually receive your messages or your alert, I should say, they're gonna have that price called on their alert, but you have to realize that a lot of times they'll call that and maybe the alert is delayed, but sometimes the play will run like as soon as they call it. So as soon as they call the alert. So the point 59 is gonna be the price was at the price for that call is 59 cents. Oh, and I actually forgot. You're gonna have an expiration date too. So yesterday was what, the 10th? So let's just say that's gonna be the price and that's gonna be the expiration. So that price, not 59 cents, because remember, options plays is control of 100 Yeah, 100 shares is control. It's not actually ownership of 100 shares. You just have control. So that 59, you got to multiply it by 100. So that 59 cents is actually $59, okay? And then you have your expiration date. Pretty self-explanatory. If it's not, please let me know. I've been trading options for years now, but I think it's pretty self-explanatory. So now also, let's say you did jump into that play right there, right? You gotta always watch your risk management because somebody that's calling that play, they might not be worried about $59. But what if all you have is $75 in your account? You get what I'm saying? So I know me personally, that's happened to me. I'll jump into play and a lot of times the play will go against you or it'll take a long time for it to actually pop. So if you jump into the play and you gotta wait, are you cool with waiting it out? Yeah, you're gonna be cool if you've been following a couple of these person's plays and you've actually been making money. But I've done that and the play was going against what they called, and that after a certain point I was like, yo, you know what, screw this, I'm gonna just cut my losses. And then lo and behold, maybe the play might have went in the right direction overnight, which is swing trading. That does happen. I'm more of a scalper. Remember my video where I said, know what type of trader you are? If you don't know what I'm talking about, go back and watch it. Like I said, all of my videos are a little bit random and kind of all over the place, but they do all tie into each other. Me, I don't like swing trading, unless I have very, very high conviction. But even in that case, I might try a swing trade here or there. I like to scout personally. I like to jump in a play and jump out of a play quick. But I digress. So you're in that play. Cool. Now you just, I don't want to say you're twiddling your thumbs, but you're waiting for the person to, give you the go ahead to end that play, right? So you got a bottle open to when they want you to jump out of the play. You're gonna see STC, and then you're gonna have all that information is gonna be the same except for the price. I don't know, let's say let's say that's what you see on your screen from that same person that called to play, right? I will hope you were watching the same person that called to play. But yeah, STC, sell to close. Still the same stock. Same call. Same strike. Now the price, you went from 59 and now you made $100. That's not too damn bad. That's about a 66% gain. That's not bad. And then the same expiration. So yeah, I hope this video was pretty helpful to somebody. At least trying to get started. Remember, if you're not comfortable as far as risking your money, or they call a play that might be, way too expensive for your pockets, you always have the option of paper trade. So if you're using Robinhood, there's a feature when you go into the stock options and go to trade it, you can select all of this information, and then instead of actually buying the call, you could add it to your watch list. And Robinhood it'll keep everything, all the information when you bought it, the price you bought it, all of that stuff. It'll keep it in a watch list, a separate watch list for you. Webull has a paper trading feature to where you set up an account to paper trade. And if you're not trying to do all of that, you could actually just keep hand notes without even trying to without trying to enter any information onto any of these apps if you feel like you might mess up and actually buy something. Just something to keep in mind. I'm going to end this video here. I hope this was helpful. I hope somebody gained some knowledge. Y'all let me know in the chats. Was this understandable? Do you get what's going on if you was to actually follow somebody's plays? Let me know what I could do different. I won't get mad. I'm still putting myself out there as far as this teaching thing. I'm just doing my best. But yeah, thank y'all for watching. Be sure to drop a like. If you're not already, subscribe to the channel. I do a whole lot of how-to, a lot of knowledge. And yeah, I'll see you guys in the next one. Peace out.